this moment, history is being made.
Today, the greatest risk of global catastrophe doesn't look like this. Instead, it looks like this.
Today, I am officially declaring a national emergency.
Millions of Americans are worried after the worst day on Wall Street since the 2008 financial crisis.
A global economic crisis has been coming for 10 years. None of the problems that happened in 2008 were fixed.
There is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
More and more people will choose a currency that a government does not control.
This is not a test.
If this is your first time here, make sure you subscribe and click on the bell so you don't miss any new videos. Throughout history, mankind has faced many challenges. With each passing crisis, we learn valuable lessons along the way. We bounce back, stronger, better. But sometimes the world is not ready for what's to come. Sometimes our worldviews face the ultimate test. These periods define us. It was early December 2019 when health officials in China admitted they have a problem.
In China, health officials have announced they expect to see the coronavirus outbreak intensify. The virus has already appeared in all but one of China's provinces.
Growing concerns this morning about the worldwide spread of the coronavirus.
There have now been more than 10,000 people infected with the virus in Italy.
Well, governments globally are enacting strict measures to contain the coronavirus.
All of Italy is going on lockdown.
It's official. The 2020 Tokyo Olympics will be postponed by a year.
Over 120 countries. It's called the invisible enemy, and that's what it is. It's an invisible enemy.
Something unthinkable just weeks ago. Tonight, the U.S. has more confirmed cases of the deadly coronavirus than any other country in the world.
There are now more than 1 million confirmed cases worldwide, although the true number could be much higher.
Now, suddenly, we might be facing our biggest challenge in the past century, a worldwide battle against an opponent uncommon, unseen, and unnerving. Governments around the globe are scrambling to understand, track, and contain it. On March 11th, it was declared a global issue. It didn't take long for the global markets to react, and it seemed like it was 2008 all over again.
The stock market is now down 21%.
Traders here working the phone say a lot of their customers are freaked out, waiting to see how low the Dow will go.
Really, you're seeing just broad-based declines across all of the major technology sectors.
The heightened financial turmoil that we have experienced of late may well lengthen the period of weak economic performance and further increase the risk to growth.
What started in America last year has now spread to every part of the world.
This could be the most serious recession in decades. And that means life, as most Americans know it, is about to change, in some cases dramatically.
The basic story of the 2008 financial crisis is familiar enough. Memories have centered on government recklessness and private criminality that led up to the crash.
It is my opinion that you do not really understand the concept of banking. All the banks are broke. Bank Santander, Deutsche Bank, Royal Bank of Scotland, they're all broke. And why are they broke? It isn't an act of God. They're broke because we have a system called fractional reserve banking, which means that banks can lend money that they don't actually have. It's a criminal scandal, and it's been going on for too long. And most of the problem starts in politics and central banks, which are part of the same political system. We have counterfeiting, sometimes called quantitative easing, the artificial printing of money, which if any ordinary person did, they'd go to prison for a very long time. And yet governments and central banks do it all the time. The sheer effrontery of this is quite astonishing. It's central banks that manipulate interest rates, Commissioner. So when banks go broke through their own incompetence and chicanery, the taxpayer picks up the tab. It's theft from the taxpayer.
Governments across the West rushed to bail out their ailing financial institutions. The problem was that the world's banks needed dollar funding, and the only institution that could fill that need was the Federal Reserve. Thus began a series of fiscal and monetary stimulus. The money printers were running at full capacity in an attempt to bail out the system. It's a stark reminder that central banks can basically print money out of thin air and slowly ruin the economy. When iconic US investment bank Lehman Brothers Holdings filed for bankruptcy, it shook people's faith in banks so much that a new class of asset, which did not have the backing of any formal bank, came into existence.
You confiscate a few $1 billion out of private bank accounts and you print a couple $1 trillion, and all of a sudden, you know what happens? People start to worry. So out of this worry, we have something called the Bitcoin. Now, what's the Bitcoin? Bitcoin is an electronic online digital currency, was created about 3 years ago, kind of flew under the radar. Now it's starting to actually gain some traction. You exchange your dollars, you exchange your euros, whatever, you go onto these networks, and it's an accepted currency, and it's zooming in value lately. Just unbelievable how much this has taken off, and there are places that are beginning to actually accept this sort of universal digital currency. Kind of operates in the shadows, not regulated, but it's a total outgrowth of people starting to get worried about these currency crises, debt crises. Where are these things accepted? Still not a lot of places. I checked out online, not a lot of websites that you would recognize, but the places are kind of novelty clothing, gaming sites. This tells you how really insecure people are in this age of debt and currency crises and all the other things that we have going on in the world.
We now had a decentralized, immutable system that could not be manipulated. We now had sound money. More than a decade later, Bitcoin has become one of the most debated and controversial financial assets. From a value below $1 in 2010, it went on to become the best performing asset of the decade.
There was an investment in the last decade that turned $1 into $90,000. What is it?
This is literally the top investment of the past 10 years. And would you believe it's Bitcoin, the digital currency? Yes, $1 in Bitcoin on January 1st, 2010 would leave you with 90,000 today. And that's even with Bitcoin off its best levels. It's about $7,200 US right now. It was above 20,000 US 2 years ago. It remains a very speculative investment, but you know, more and more retailers are accepting it as forms of payment. We see those ATMs that we're looking at as well. And some of the big investment banks are dealing with it now, adding some legitimacy to Bitcoin.
But now, Bitcoin is facing its biggest challenge to date. What follows next is a chapter that's going to be written about in history books forever. On March 11, 2020, the Dow Jones Industrial Average closed down by almost 2,000 points, ending what will be remembered as the longest bull market run in history.
Spreading outbreak is also costing investors trillions. On Wall Street, it was another wild week.
The Dow Jones Industrial Average suffered its biggest one-day blow since the market crash of 1987, digging deeper into its first bear market in a decade.
The White House's economic director Larry Kudlow is hoping to calm fears.
I will still argue to you that this is contained.
The sense right now among investors is that we just don't know the extent of this virus, and that's why we've seen so much volatility in the market.
You are a 30-plus year pro. Have you ever imagined that we would see a few trading days like the ones that we have?
I'd be lying if I said the answer was yes. Unfortunately, no. The short answer is no.
In the end, more than $2 trillion got wiped from American stocks. Global equities saw another $6 trillion of value erased. Every single asset in the world faced back-to-back losses. Stocks, credit spreads, treasuries were up one day, down the next. As liquidity worries grew, circuit breakers were triggered. Market volatility, a beast that's been dormant for years, awakened. And it wasn't slowing down one bit. Why was this happening?
Right. That's way too much. It's just too much. All right, guys, sorry about that. There's nothing I can do about that, guys. We have seen some big paper sellers coming in. It all started out up above around 30.
We are watching a liquidity crisis playing out in real time.
Here they come to sell them again. 9.5 straight night, 20 straight night, even straight here. Now, guys, 8 halves are trading as well.
With no liquidity, everyone is rushing at the door at the same time, looking to sell. The only problem, all buyers are now sellers. And that is when panic and chaos breaks loose.
5 evens are trading. 4 evens, 3 evens out trading here, 2 evens out trading.
It was clear the world has been underestimating one unpredictable catalyst. There was no real way for the markets to price in this incalculable variable. We finally had the president come out with a response, and that there would be a variety of economic measures to address the market impact. The global market crash caused by this invisible enemy revealed an ugly truth about the economy. Lessons have not been learned.
I think we're already on the verge of a big economic crisis. I think the situation that's happening in Asia with the spread of COVID-19 is going to precipitate an economic crisis. So that's certainly going to be blamed as the reason for the economic crisis. But a global economic crisis has been coming for 10 years. None of the problems that happened in 2008 were fixed. I think the average person really can understand that a lot of it was just swept under the rug and bailed out, and the average person isn't much better off than they were then. The future of finance worldwide will be with much more decentralization based on open protocols and open systems that can reach everyone, with a reduction in the need to authorize and vet participants, and instead build security mechanisms that do not depend on vetting, but depend in the kind of game theory that we see in proof of work and proof of stake systems and other consensus algorithms that might emerge. The future of finance is open, decentralized finance, and it will help bring the whole of humanity into an economic system that everyone can access. And I think that's going to happen. It may take several decades, however, to emerge that way, not because of the technology, but because of the geopolitics surrounding it. The ability of governments to control money gives them enormous power, and they're going to fight tooth and nail to preserve that power, even at the expense of their own people.
Today, we have the US Federal Reserve taking emergency measures to bail out the markets by printing even more money. Again.
The crazy thing is, in 1971, when we formally abandoned the gold standard, the reality was every country realized that all of a sudden they had infinite power, and it lied in each of their central banks and the ability for those central banks to print fiat money. And so ever since then, we've just basically been printing ad nauseum, effectively. And what Japan has really shown over the last 20 years is, as long as I keep buying my own debt, everything's going to be okay, because, I'm paying myself back. And so I'm just round tripping money constantly. I can keep this whole thing afloat for a very long time. Now, America has a different problem in that it has always been the reserve currency. And there's a lot of foreign entities, governments, and otherwise that own American debt. So, the United States can go and play this game for a while, but eventually it comes home to roost, because you're going to have to start issuing paper at a higher and higher risk premium. The question is, how do you do it?
The writing is on the wall. Governments are running out of ammunition. Slashed interest rates and trillions of dollars in quantitative easing are slowly eroding the value of fiat currency. These measures risk plunging the economy into another recession instead of addressing the underlying problems. Bitcoin was created to fix this.
The way to think about this is, just like you said, it's gone from worth very little to worth a lot more. There's been many bull and bear cycles over that time period, really 4 of them that you could count. It's a volatile asset, but if you look at the underlying fundamentals, the strength of the computing network, etc., all of those things are hitting near all-time highs or all-time highs, so it's very encouraging. I think in terms of a store of value, it's still up over doubled this year, and so you're going to get this asset that can run 2, 3, 4x, and then it'll pull back a little bit, and then it'll run again. And when you have a store of value with artificial supply cap, you need increased demand for that price to continue to move upwards.
Why would you own Bitcoin if you could own the US dollar?
I ultimately believe that people are going to opt for something that is not manipulatable, is not seizable, is not censorable.
Not debasable.
Not debasable, etc. And so I think people are going to continue slow at first, but over time, more and more people will choose a currency that a government does not control.
You see, this invisible enemy is just the needle that pops the central bank bubble, the catalyst that provides an exit ramp in the event of the inevitable currency collapse. Fiat money is designed to inflate indefinitely. It's a ticking time bomb. Bitcoin, on the other hand, was designed with a fixed supply of 21 million. Most importantly, it is not governed by a central entity that can decide to increase its supply in times of trouble. Thus, we are on the verge of witnessing the largest fiat exit in history.
I think that this is the setup, meaning I think Bitcoin needed a moment like this for it to be relevant. We are driving slowly, but we are driving towards a top of a cliff. And then we're going to drive much, much faster down that cliff. And at the end of it is a huge brick wall. The way we avoid it is by pivoting to a resilient economy where we introduced inefficiency and cost or debasement. The path dependence for Bitcoin is if it looks like path 2 is likely, it will really emerge as a flight to safety. And over the next 10 years, where this trajectory is going to take shape, and it is a 10-year trajectory, you'll have a lot of time to protect yourself and to hedge yourself. I've always thought of Bitcoin as a very binary investment, whether it goes from 80 to 8,000 to 6,000 to 3,000 to 13,000, it doesn't matter. This is either zero or it's millions, because what it will do is it will create a quasi-gold standard. It'll create an index, except instead of having to own gold, where gold is owned by central banks, it is an instrument that has value that's determined by and between its participants, and it's owned by everybody.
To free capital from the chains that banks and governments have wrapped them in is revolutionary in scope and monumental in size, like the internet, but bigger. Bitcoin is not just an alternative to money, it's a rejection of the current economic system. On our current trajectory, hyperinflation is inevitable. While governments are busy printing even more money, Bitcoin is about to see its incoming supply cut in half. One of the scarcest assets in the world is about to become even more scarce. This is the biggest opportunity Bitcoin has ever seen.
You're going to see the rate cuts, you're going to see the quantitative easing, and then you're going to see the Bitcoin halving. It's all going to happen around the same time. And I think that Bitcoin's going to become incredibly attractive to a lot of people here in the short term or very quickly.
While all the noise is going on in traditional markets, the decentralized digital currency will keep on doing exactly what it was created to do. Block after block, the strongest computing network in the world will continue to march on, trading 24/7. No circuit breakers, just a global, free market. This is the ultimate exit, one where we're able to build a new system of finance, economics, and government itself.
There's a real chance by 2030 we don't find a way to inflate our way out of this, and that the only way to break the back of deflation is essentially to create some quasi form of gold standard, but it'll be almost impossible to do that between governments and central banks. They'll never agree on an instrument and they'll never agree on an exchange, but then bottoms up, people could decide to do it. And the minute that happens, individuals and people, then it's a done deal.
First, I have to give Bitcoin creators credit. At least they know enough not to trust fiat money that's controlled by our government.
Then why would people trust Bitcoin? It's not control. I mean, why trust something that's digital?
Well, I guess you can trust it because it's not controlled by anyone. I mean, had PayPal invented Bitcoin, we'd all be heralding it as the most important financial revolution since the internet, since the credit card, perhaps.
How do you account for all of the unknowns?
Well, it is regulated.
What's the value of it? I mean, well, what's the value of one Bitcoin?
I mean, I think right now one Bitcoin goes for about $110, and I think it's skyrocketing precisely because of all these great aspects about it.
The whole Bitcoin market is about $1 billion. It's a novelty for the geek squad. I can assure you, if these became well promulgated, then the U.S. government would shut it down.
And just to give our viewers some perspective, there's about $4 trillion in currency trading every day, and as Michael said, it's about $1 billion worth of bitcoins.
Is getting any traction in the markets then, Jeff?
Well, yeah, absolutely it is. I mean, it has quintupled in value over the last year. Just since the Cyprus thing came up, it's up over 20%. Over the last month or about a couple months, it's up over 40%. So it's actually getting some visibility out there again.
Your purchasing power can be wiped out in a nanosecond, and that's why it would never be widely accepted in this country.
I hear you say that, but that doesn't make it true. And I think that there are people who spend a lot of time on this that might know this topic maybe a bit more and who would believe in it.
Nothing lasts forever. humanity will bounce back. We always do. With each passing crisis, we come out stronger than ever.
There's no need to panic. We don't have to hoard cans of spaghetti or go down into the basement. But we need to get going because time is not on our side. In fact, if there's one positive thing, it's that it can serve as an early warning, a wake-up call to get ready. If we start now, we can be ready for the next epidemic.
There's no way to measure just how bad the consequences of the current monetary policies will be. But if you think that at the end of all of this, somewhere, lies a digital immutable future, then you already know there is no exit plan for Bitcoin. Bitcoin is the exit plan. If you made it to the end of this video, let me know in the comments if you're bullish or bearish on Bitcoin in 2020. Also, make sure you subscribe and like this video. Thanks for watching, and I'll talk to you later.